This is Bharat Bahari from the class Financial and Accounting Skills for Manager, and this is my presentation. The agenda of the presentation is I'll start with the vision of the presentation, moving on to what I learned from the chapter 1 and 2 of the book, the textbook. Moving on from there, I'll talk about the trial balance and its purpose, and then I'll give you an example of the trial balance. Moving on from that, I'll discuss what the balance sheet is, and then we'll drive the balance sheet from the example of trial balance, and finally, I'll conclude my presentation. So, moving on to the vision. Why should we bother studying these concepts of financial or corporate financial finance, and what is in for us? So first thing is that after learning these things, these concepts, we will be able to make informed financial decisions, and this will also help us do some career advancements, as we'll have more knowledge and will be more proficient in corporate finance, which opens up the opportunities for career growth and advancements. And these concepts we can also apply to the personal finance management, which is very important in today's era. Not just earning, not just hard work, it's very important that we learn the finance and we do some management and be financially successful, and so that we can plan ahead. So the major concepts that I learned from this these chapters are the roles of the financial manager. Uh, Financial manager who is responsible for making the decision that maximize the value of the firm. Uh, they analyze financial data and make informed financial decision or investment decisions, and also manage the risk, where to invest, where to not, where to take money, where not to take money. So ensure the efficient allocation of the resources. So these are the roles that the financial manager has. Then we the chapters discuss the goals of the corporate, which were definitely to maximize the shareholders' wealth. So as they are financial institutions, so the main is they should be profit making. So this means that making decisions that increase the value of the company's stock, and definitely that will benefit the stakeholders or shareholders. The third thing that I learned is that about the financial markets and the institution, which are the individuals and the organizations that buy and sell financial assets such as stocks or bonds or derivatives. These financial institutions facilitates these transactions. So those are the financial institutions that do all the transaction in the financial markets. Uh, the fourth concept is the time value of the money. So it basically tells us that the value of the money which is today is not same or not equal to what it was, what it will be, because at the current stage we can invest in multiple assets and they may uh, result in growth. So the concept of time value of money is this, that the value of the money is not equivalent today as for the two point of time. So let's move on to the concept of trial balance and what purpose it serves. So trial balance is basically a tool that companies use to ensure that they don't have any kind of mistake in their ledgers. So trial balance basically record all the debits and the credits, and after a particular month or a particular time, they tally the debits and the credits, and if they are equal, then it's said that there is no mathematical error. So this is the main purpose of the trial book, is to check the mathematical errors and verify that total debits and credits are equals. And this is generally for the internal purpose, whereas what we're gonna discuss in the coming presentations, which is a balance sheet, that will be from internal and the external. So here is an example of trial balance. It's a very simple examples. um, I just took six accounts: cash, account receivables, inventory, account payables, share capital, and retained earnings. So a very simple table in front of you that shows that in total there are 25,000 let's say dollars in debits and $25,000 in credits. So this shows that the total debits and the total credits are equal, so there is no mistake in the company's book. So let's talk about the balance sheet now. What is a balance sheet? A balance sheet is one of the financial statement prepared using the information from the trial balance or trial balance sheet. It provides a summary of what the company owns, what it owes, and the residual value of the company at a specific point of time. So, for example, maybe at the month end or a quarter end or half year or at the end of the financial year. So, this thing is used for internal as well as external purposes. So, let's talk about what it has. So, let's talk about what assets, liabilities, and equity is. So, assets are the resources that is owned by the company and that has some economic value, whereas liabilities are the obligations or the debts owned by the company to external parties. So these includes accounts such as the account payable, whereas the equity is simply, in very simple words, is the net worth of the company right now, which is definitely calculated difference uh, between the total assets and total liabilities. So if it is positive, so the net worth is positive. It is negative, so that simply means that the company is uh, you know bankrupt right now. So it includes accounts such as share capital and retained earnings, and things like that. So let's now derive the balance sheet from the example that we were doing. So assets, definitely the cash that we have right now is 13,000. Account receivables is 5,000 and the inventory is 7,000. So this is what the company owns right now and has the cash in hand. And this total, when we add, is $25,000. So liability was $6,000, which was account payables, and equity, which is share capital, which was 13,000, and the retained earnings was 6,000. So when we add liability and the equity, it's 25,000, or you can deduct the 6,000 from the assets, and what we'll get is the equity. So, moving on to the major takeaways from the presentation. So, in conclusion, understanding these concepts of corporate finance is vital for anyone seeking financial literacy or professional growth or effectively managing their own finance. Today, we have explored key concepts of the corporate finance, such as trial balance, and then we derived the balance sheet from it. So following are the takeaways from those. The trial balance helps us ensure the accuracy in the accounting records, whereas the balance sheet provides us the snapshot of the company's assets, liabilities, and the equity at a specific point of time. So, as I said earlier too, these concepts are not only for the corporates, but has a practical application for the personal finance also. And this brings us to the end of the presentation. I thank you for your attention and I look forward to any questions or comments that you may have. My name is again Bharat Bahari and I'm available at b.bahari.359 at westcliff.edu. So thank you so much for listening to me.